This is the Traders Exclusive Live Trader Showcase. I'm Sherry. This is the quarterly event where we feature expert traders and bring you training and insights from 20 expert traders. We have prize giveaways for everyone in attendance. We're going to do some drawings. We have some surprise interviews. Please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. This is also where you're going to find the recordings for this event. And before we get started, we have to share a quick disclaimer. You know it. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. This is training. You have to do your own research, and you should always verify and research. Paul Lange is up next. He's going to be talking to us from Disciplined Trading Strategies, Learn When to Walk Away. Can't think of a better topic for our last speaker of the day. I'm kind of sad that it's already done, but I am going to get the replays up. I am going to make it so that it's easier than scrolling through 8 hours of video. So I'm working on that. I had it up. The first day was up, but I didn't like the way it went, so I'm redoing it. Paul, thank you for joining us. Are you there?
Hi, Sherry, I am. Can you hear me?
Yes, good to see you, hear you. Hey, let me ask you a quick question.
Yes.
If you weren't a trader, what would you be?
Baseball player.
Baseball player, wow.
Well,
Okay.
assuming that, I still had the youth and agility and everything. I always wanted to play baseball. Maybe could have, never did.
Okay,
I love just walking out on the baseball field even. Still play softball, the closest you can do.
So how did you get involved in trading?
I backed into it in just a stupid way. I had a business I sold about 25 years ago, and it was one of those things that had some money, but not enough like to retire or anything like that. And I didn't know what to do. So I floundered around for a year or two and heard a commercial on the radio, which actually turned out to be just from a, I won't say where, but from a scam place. But it got me interested in the market as a vehicle to make money and got involved eventually. And here I am today. So just kind of backed into it. When I started, I had no knowledge at all, a stock from a bond when I started, which is something I like to preach a lot to people, that you don't need any experience at all as far as I'm concerned to learn this. And I don't mean to learn it in decades. I mean to learn it very quickly in, a few weeks, few months time to be able to make money.
Fantastic. All right, well then what I'm going to do is mute myself so you can take it away, and I'll turn you into the presenter. So hold on 1 second.
All right. And for those of you who don't know me, it probably will take me, for some reason, I always have a hard time with this particular software, GoToWebinar. So let me see if I can do it right this time.
You know what? Let me introduce you properly because I do have it ready. Folks, this is Paul Lange of Disciplined Trading Strategies. He's going to talk to us about Learn When to Walk Away. He started Disciplined Trading Strategies in August of 2017. Disciplined Trading Strategies is a site for traders and investors. He runs a very popular day trading room and also publishes The Long-Term Trader, a portfolio for hands-off long-term investors. He also provides a ton of free information on the DTS free stuff page. You got to go check it out, and assistance to new people through his website, and the best seminar program for those that are interested. He's a very experienced trader, investor with 20 plus years in the trenches every day. So take it away, Paul. Thanks a lot for being with us.
Thank you, Sherry. Do you have my slides up there?
Yes, I do.
All right.
Learn when to walk away.
Great. Well, thanks again for having me. Always a pleasure to be here. You're actually really the only place I speak at. So I like you guys here, and thanks for having me, Sherry. I got the privilege of batting cleanup here today. I don't know how many of you have been around for the whole presentation or how many you've seen. I imagine you've taken in a whole lot of information. I don't listen, to the other people. I just saw the highlights of who's speaking. And I imagine when you're all done, you have to kind of walk away saying, wow, I've heard different ideas and concepts. What is it that I want to do? So all I can do is present to you what I know, what I do. I want to emphasize to you that my only goal, desire is to make money every day. That's it. And whatever is needed to do that is what I will do, of course, within legal limits. And I found my own way through. And to me, it is all just about technical analysis and chart reading. And it's to the point with me that there is no discussion about it. Like a lot of things in the world today, there is no discussion, it seems like. But there is, when you really understand what you're doing with technical analysis, it works wonderfully and it incorporates any other thing out there. And I don't want to step on any toes. I'm glad the presenter before me was talking about psychology. That sounded great. Psychology is a big part of anything you're going to do trading. I do believe that anybody can learn to read a chart. What I'm talking about today, you'll see the little subtitle, there's a discussion about management, because management is eventually what makes or breaks you, I believe, because it involves so much psychology, as the prior presenter was discussing. But to me, there is no other way to make money in the market. And if you follow me at DTS, there's a lot of free information available to people, and you will see why I discuss and talk why there is no such thing as fundamental analysis anymore. That's long gone. And I don't just use that as my opinion. I prove it to you. I'm not going to do that today, but in other discussions. Using news is completely worthless. Will have you backwards. The market is the most forward-looking discount indicator out there, and you just don't know how much is out there. And people lose all the time because they're listening to the news, they're listening to comments, they're listening to fundamentals. And the charts synthesize all that, and we know how to read it. It's an incredible vehicle. So I am a technical analysis person 110%, because that's the only way for the average person to make money. Unless you have millions or maybe even billions in the bank to use for your own fundamental research, which not many have, the only way to do things is through technical analysis. So what I like to do here is start off with the slides. This is the quick little summary slide of what we're going to do here today. The catch line there is I think anyone can learn technical analysis well enough to make money. Now, most people don't. I hear a lot of flack about people that, oh, I took this class or that class and it doesn't work. I talk a lot about the difference between C+ technical understanding and really an A+ technical understanding. I teach, I understand an A+ technical understanding. Most people who take a quick course, watch some videos, self-research themselves, they end up with a C understanding. And if you have just a C basic understanding of technical analysis, you will only know enough to lose money slowly. It's become one of my favorite sayings, and people chuckle at that because they've been through it and they know, they understand, and that's where they're at, or they reach the epitome goal of breaking even. That's the goal, the highest goal they can reach. When you really understand technical analysis, it works great. But part of understanding technical analysis is understanding management. Managing entries, managing stops, how to get to that target, because it's one of the most challenging things you can ever do. That's what today's discussion is really about. Please understand, I can't sit here and begin to teach you technical analysis. That's what I do at DTS for those of you interested. But what I can do is raise great awareness to things that you need to do, whether you want to teach yourself. I am for that. If you want to try doing that, I have a lot of free resources at DTS, and I will even get together and talk with you for free about your plan, what you're trying to do, look at your trades, whatever it is you want to do. I am for that because I tried to do that in the beginning as well. I figured I'm a fairly smart guy, I could figure this out. I couldn't really figure it out because the whole market thing is very counterintuitive. And that's why the vast majority of the people who go out to tackle the market for themselves lose. This is one of these games where 10% of the people make 90% of the money. It's really true. Quick discussion before we get started. I'll give you more information on me at the end if you want. I figure you don't really care who I am if you don't like what I have to say. If you do like what I have to say, you'll figure it out yourself. So we'll look at that real quickly at the end. I do want to point out to you, whether you like or don't like what I have to say, that I feel that DTS, Disciplined Trading Strategies, has more useful free information than any place on the internet, anywhere, big boys included. There are bigger sites, but they give you useless and worthless definitions of things that don't help you at all. There's great information there. Check it out. There are all of the events that I've done since the beginning of DTS 7 years ago are posted there. Trade of the Week videos, other educational videos, a great backdrop for those of you who are looking to try to teach yourselves. And it's also considered by me to be required supplemental material for my seminar students. I do want to point out also that I'm not going to have any kind of deal for you today. I don't have offers. I don't have specials. I'm not going to have some concluding slides saying here's a package for 98% off or whatever it is. I'm not into that. I in a sense, kind of do this for a sense of fun and enjoyment. I'm very proud of the students I've traded, that I've taught. And I'm proud every day that we make money in our trading room all the time, and the long-term letters doing great. All that stuff is great, and I enjoy doing this quite a bit. I do have products I sell at DTS. There's the seminar package, trading room, long-term trader. If you're interested, you can go to the website, figure those out for yourself. I'm not even going to give you a link. But I do want to point out there's never a sale. As a matter of fact, prices have always gone up a little bit slowly at DTS. There's never a sale. There's not going to be a concluding slide. So if that's what you're looking for, it will not be there. What does this mean? Learn when to walk away. Well, there's two different meanings. There's kind of a figurative comment, which means that most traders suffer from management. And walking away is just maybe a theoretical thing in one sense to say, hey, back off your management a little bit, at least understand what you're doing, because I have worked with an awful lot of traders. And I have to tell you that the first problem for traders is they simply don't know what they're doing. And by the way, if you're starting to nod off or something, I will have a chart coming up in a second here that'll show you just an example of what I'm doing. But a lot of this is just kind of talk, but I think it's probably the most important talk that you will hear. The first issue for most traders is just learning what they're doing. You know, when I work with people that come to me, and I'm talking about non-DTS students, they just come to me for some help, and they're just clueless in what they're doing. They're just taking trades because they don't know why, because they heard a news story, whatever it was, and obviously they're never going to get going. But then there's a second level of person who actually has some idea what they're doing, and actually I feel could probably make some money, except for one thing: they don't manage properly. They just can't manage, and they're losing trades or losers, of course, but they're winning trades they don't make any money from because they're afraid. There's a second meaning to the walk away, and that's a literal meaning, and that is, as a day trader, and this would apply to day trading, I walk away for the majority of the day. In my trading room, I like to trade the opening 60 to 90 minutes. I feel, for me, that's where the edge is. That's where I love trading. I love trading the opening 5 minutes, 30 minutes. I leave positions open typically for half day, all day, and I'm not there. I make way more money not being there on balance. And sure, you could pick a trade or two, whatever, where you said, hey, if you had been sitting there, maybe you would have made more money. Well, maybe, but on balance, I make way more money by not being there, because if I understand the chart, if I know where I want to go, there's no point in sitting there. What are you doing? If you have a stop in place, if you have a target in place, what are you doing sitting there looking at it? You have no right to even be sitting there. So I'm going to get to that in just a minute on a couple of these slides. By the way, I'm just going to kind of run through this, and if you don't mind at the end, I think Sherry will save all the questions for me. Sherry, I sent you the free stuff link there. I imagine you sent that out. And let me just see if I can open this up.
You want me to send it out right now?
Yeah, you can send it out. Sure, send it a couple times while we're talking, so people, you know, when they get bored, they can go there and look.
Right.
And then at the end, I imagine you can relay any questions to me. So I'm just going to kind of run through and, you know, not stop for any questions till we're done here.
Sounds like
All right,
a plan.
we done at 3:15 or 3:30, Sherry?
You have a whole hour, so 3:30.
Okay, all right. Typical trader comments. Now, what I'm saying here is when I tell people they overmanage and, hey, why are you doing this? One of the common things I get back is, well, you know, sometimes, Paul, if I'm sitting there, and right now I'm talking about day trading, but it really applies for long-term also. I mean, if you have a longer-term trade, a swing trade, and you're in there at 2 o'clock in the afternoon on a 5-minute chart bringing your stop down, you're probably messing things up. But specifically as a day trader, people say to me, oh, you know, the only time, several times I'm able to reduce a loss by sitting there. Well, okay, the only time that over management improves results if you're a losing trader. Think about it, right? If all your trades are losers, then stepping in to reduce a loss means you're losing money slower. And this unfortunately becomes the goal for so many traders and where so many people are at. And obviously not all of you are. Some of you are probably fairly successful or very successful at your trading. But I'm talking to people who are kind of looking for help. They're saying, hey, I'd like to do this trading thing. It is the greatest job in the world, but there is a threshold to get over to be successful. And one of those thresholds is understanding management. So if your goal is to have a whole string of small losses, well, then step in and keep minimizing your losses, and that's what you're going to do. But to me, that's not a goal. As a matter of fact, the very notion that you feel you have to sit there means that you generally never get to a target and have no confidence. Here's a thought for you. Here's an astounding little, I put these little tips out from time to time if you're a member of DTS. This is one of the earlier tips. This quick little, 1 or 2 line blurb. Anytime you're in a position that eventually hits its target, any management you do costs you money, sometimes a lot. Did you ever think about it that way? We're also proud of our management. We have to sit there and take care of this position because that's what good traders do. That's a bunch of crap. That's what losing traders do for the most part. If you're in a position and you have the confidence to know where it should be going, think about that line. It's a true statement. It's a mathematically true statement. You can't argue with it. If your trade hits its target, any management you did cost you money. Took a third of it off, took a quarter off, took half off, whatever you did, anything you did diluted the trade down. And sometimes it costs you a lot of money. Sometimes it costs you your entire career. Second comment here, a lot. A good trader needs to manage to prevent excessive losses and maximize profits. Again, that's just an ignorant comment. Number one, you're not going to prevent excessive losses because you have a stop in place. When you leave the screen, you have a stop in place, wherever it was from the original stop. Maybe you've already changed it once, whatever it is. So you're protected. You don't just sit there and watch it hit the stop. And number two, to maximize profits. Well, here's the question. The second blurb here. As far as maximizing profits, here's the question. Are you increasing profits by sitting there? Are you? Think about it. Answer the question to yourself. Type it on the screen. Are you increasing your profits by sitting there? Here's the key thing. Do you even know? So many people think they do. They feel they're increasing profits because they'll say, oh, wow, here's a stock. And, I was up $150. It started to go the wrong way. I locked $100. And sure enough, then it went to negative 100. And I took it off my screen. And man, I locked 100 instead of losing 100. But at the end of the day, it was up $2,300. But they still in their mind feel, oh, that was a smart thing to do because I locked in that $100. Do you know if you're actually making money? There's a simple test you can do. I didn't include it in the slides because I'm going to run out of time here even as it is. But if you were to just go back and look at all of your prior trades that you did, take the last 20 trades, for example, as a day trader, and say, what would have happened if I just didn't manage them? I still took my stop. So, -1 risk amount, whatever you're risking. Let's say you're risking $1,000. If you risk $1,000, boom, every stop's down $1,000. But what about the target side? What if I just walked away to the end of the day, or what if I walked away until the target that I chose was hit or not hit? What would have happened? And it kind of leaves you with a funny analysis, because if you do much better, which by the way, 85% of traders who take this test find out they do much better, and that's a real number that I have from literally hundreds of people who sent me this. If you do much better by not sitting there, in other words, by letting your trade just go to its natural conclusion, then the question is, why are you sitting there? And if you do better by sitting there, the odds are it's because you have all losing trades. So then you have to back up and say, well, wait a minute, I'm not picking good trade. This whole issue of management, it's a psychological issue in some degree, but all psychological issues start with the backdrop of knowing what you're doing. If you think about it, all psychology comes from knowledge, first of all, or the lack of knowledge, right? If you have confidence in your trading, you have more confidence in getting to a target. You're not as anxious to change stops and lock in small profits. It all comes down to knowing what you're doing in the first place. If you can't relate it to trading, think about just in your own life. If you ever had to do public speaking, for example, right? It can be a scary thing if you're talking about a topic you're not confident about. If you're not sure and you're worried about questions you're going to get, you're scared to death. But for those of you that have done public speaking, and I have, in live groups, I've talked to several hundred people about trading. There's not a question in the world you could throw at me about trading that I wouldn't have an immediate, confident answer for you. I'm very confident in front of people, not anxious at all. But I would be if I didn't know what I was talking about. Well, the same thing permeates into your trading. You have psychological issues. The root problem of them is that you really don't know what you're doing on the charts. You're not sure how far the trade may go. You're not sure when the correct time to raise the stop is. If you don't know the answer to this question about whether or not your management is hurting or helping you, you're not a serious trader. It's completely unacceptable to be trading and not understand that. Again, whether you're day trading, whether you're swing trading, whether you're long-term investing, this question is something you should immediately know the answer to. Let's review something why this topic is important. Here's some really useless or stupid cliches. The fact that they're so popular is an indication of the issues that are out there. These are cliches about management. You talk to people about management, they say, oh, how do you manage better? Here's some things people say. Let your winners run, cut your losses short. Okay, great comment. It's kind of like saying to make money trading, you buy low and sell high. But how do you do that? It's not helpful. There's nothing wrong with the comment. Sure, that's what you want to do. But how do you do that? It doesn't begin to tell us. Exit when the trend changes. Well, in theory, that's kind of true. But something I teach my students is the second the trend changes, we don't actually exit. Because when an uptrend ends, here's a question for everybody. I won't see your answers, but when an uptrend ends, everybody, what's the next most likely trend when an uptrend ends? I'm going to take a sip of my beverage here. Think about it. If you want to type an answer, go ahead. What's the next most likely trend when an uptrend officially ends? Go ahead. The answer is, statistically speaking, is that another uptrend begins. Not many people get that correct. So the concept of exiting when the trend changes has some theory to it, but isn't really actually what you should be doing. Get to break even as soon as possible. This is taught to minimize losses, but is only a mental crutch. Break even, that word has no place in your trading in terms of management. Maybe at the end of the day, you could say, oh, that trade broke even, that's fine. But when you're managing, you don't manage to break even. It's an insanely ridiculous concept. Your break even is not on a chart. What it is, it's a mental crutch, because at the time that you're breaking even or better, you're not a loser. And that's what everybody's afraid of. That's where all psychology comes from in trading. You don't want to be a loser. I tuned in to get suited up here the last 10 minutes, and the previous speaker was mentioning that. He's very right. Big thing in trading is just that little psychological thing. I don't want to be a loser. And that means that you start going crazy about management when you're slightly in the money. Get to break even is not a part of any kind of trading plan unless you're a beginner and you're struggling very much. Another word on that too is that sometimes people will say, well, as a new trader, you should do this, this, or this. Again, I can't think of a more ignorant comment to say to somebody. You don't start off learning to trade as a new trader, and then somewhere down the road, somebody taps you on the shoulder and says, oh, okay, now it's time to learn how to be a good trader. Why does that happen? When does that happen? It's an insane comment. When I teach people, I teach them how to be a professional trader with every trick, every bag of tricks that I have, every trick in the book. From day one, you learn everything. And your little safety net, if you will, is not to manage differently. It's simply that you start off with very low risk amounts to learn what you're doing at a very, very safe level. I'm talking $5 just to get the confidence to understand what you're doing. But you learn to trade from day one as a professional trader. You learn just what you need to learn. You don't learn a bunch of garbage you're never going to use, which was taught out there a lot of times. You need what you learn what you need to make money in technical analysis, period. And the last one here is a favorite of mine. Can't go broke taking a profit. This is probably perhaps the most destructive line out there. It's not just useless, it's destructive. Because while theoretically true, I guess if you never took a loss, I guess you'd have to be making money. The driving mentality for you to say, I'm going to always take a small profit because I can't go broke doing that, is a fallacy. And it's exactly what makes most traders lose, because they're always struggling for those small profits, but then a loss comes along, it wipes out all of their profits. Again, the prior gentleman was discussing somebody who did that. You know, $200 gain, $300 gain, boom, $4,000 loss. Well, you can't trade like that. That comes from not understanding what you're doing. It comes from a lack of confidence. All of this, a lot of what is taught is because it sounds good, because it says it's trying to stop new people from losing too much money, but none of that teaches you how to make money. If you're struggling, is it due to poor trade selection or poor management? Here's some of my cliches, as opposed to those ones you just heard. Anyone who can learn to read a chart with plenty of precision to make money. If you make money with that knowledge, it'll depend on your management. Eventually, all traders succeed or fail based on their management. All right, here's some blurbs I want to throw out here. And again, I'm going to ask you questions, but I'm not going to wait for your answer here. What do you do after entering a trade? It's an interesting little self-analysis thing you should do. If you're in a trade and you have a concept where your target is, you put your stop loss in place, and yet you're sitting there with your right hand on the mouse staring at the trade. You're new, you're struggling, you're never going to make money. Why are you even doing that? When I enter a trade, I'm not even looking at it. If I'm in the middle of my morning busy time, I'm looking for the next possible trade, or I'm out taking a walk, or I'm doing whatever, but I'm not sitting there staring at a trade when I have no right to be, when I have no reason to be, when I have nothing I'm even allowed to do. Why would you be sitting there with your hand on the mouse? When you don't get to your target, which you'll find most of you don't, the question is, did you have no idea how you're supposed to get to the target, or you just simply weren't able to do what you're supposed to do? For most traders, you can learn techniques that work at least to some degree, even if you're fairly new. The problem for most people is not that they can't learn the technique. It's that they don't follow it, they don't do it, because psychologically they decide, oh, this one time I better take the money, or this one time maybe I better ignore that stop. Look at stops, for example, right? Who can't figure out how to put in a stop loss? The most beginning trader could figure that out, right? Whatever strategy you learn, here's where the stop is, here's how you set in the system. And yet so many people don't take their stops. Well, why? It's not that they don't know how to do it, it's that they don't do it. If you're so big on, well, actually, let me come back to that question because they're in the wrong order. I want to do this one first. What is the minimum reward to risk you need to take a trade? You're about to take a trade. You look at your stop, you look at your target. What's the minimum you need? Throw a number out there if you want to. What's the minimum you need? If you are even hung up on the fact that you need a number, to me, you're a very novice trader. This is a novice way of talking about trading. And I could prove it with a simple comment to you. What if I told you that there was a 1-to-1 reward to risk trade? Would you take it? Most of you would probably say, no, that's unacceptable. What if I told you there's a 90% chance you would get the 1-to-1? Well, now you change your mind and say, well, yeah, I guess I would take it. There's so much more to understanding trading and management, entries, getting to targets, that the simple concept of reward to risk in a vacuum like that is a meaningless thing. What traders do is they just make up targets to justify what they're doing. What matters is if you say, I'm only going to take a 3-to-1 trade. Well, here's what matters is at the end of the day, how many of those trades actually end up with profit 3 times what you risked? And you're going to find that none of them do. So you're just living in a fantasy world. You're just making up this stuff where you're saying, oh, I'll take this big target, et cetera, and you never get there anyhow. So what's the point of finding a high reward risk trade when you're not even going to do that? Now, don't get me wrong. I am all about finding setups that have a tight little focal area, a possibility of where you can get in and stop the trade and have the possibility to move somewhere. That's what trading is all about to me, and everything I do revolves around that. But the simple concept to say that you have to have a certain number without even understanding the probabilities of getting there, right? That's what trade expectancy is really all about. Great book to read if you never read it is Trading Your Way to Financial Freedom by Van Tharp. I've written 2 books, and I don't even recommend my books. I recommend Trading Your Way to Financial Freedom by Van Tharp. So this last one here, tight stops are a conservative way of trading and investing, true or false? Nothing can be more false. Your risk amount has nothing to do with your stop. You have a certain trade, you've determined a risk amount. Tight stops mean you stop out more often. That's all there is to it. Tight stops are a very aggressive way of trading, not conservative. Tight stops cause way more stop outs, yet for some reason, every time a trader is confronted with a difficult trade, they'll say, oh, I'll try it with a tight stop. I don't understand the logic at all. It's 100% backwards. My cliches are not always popular because they require you to read a chart. Your choices are how to make money or to have the goal of just learning just enough to bleed to death. I like that little cartoon there, died of 1,000 paper cuts. Some of you can maybe relate to that. Maybe you know what I'm talking about bleeding to death, about just this constant procedure of losing small or breaking even as being your ultimate goal. You have some winning trades and then you give it back. Trading is a great thing to be doing, whether you want to trade part-time in the morning and make a little extra income, if you're retired or around the house, or have a business part-time around the house, and you can spend a couple hours, a couple days a week, you can make some extra money day trading. You can take over your own investments and do way better than Wall Street. Not because the people running funds at Wall Street are stupid, some of them are very smart, but they're trading billions of dollars. And the truth of it is, you can look this up, that the average mutual fund, 92% of them do not beat the market itself. And when the market's going up, so you'd be better off just putting your money in the market if you think it's right to be bullish. When the market falls, mutual funds, their goal is to try to lose less money than the market does. These are all insane comments. You should be making money all the time, period. Next slide. So let's just look at an example to kind of prove what I'm saying here. And I have to back up a minute here, because something, if you've heard me speak before, something I'm very big on is when I want to show a trade from something, I always take a trade from the last couple of days, or at least a trade that week sometime, not going back in time a long time. But there are two issues. Number one, I'm showing a particular concept where I walked away and proved it to be something that made me a lot of money. And the problem was I probably picked the wrong presentation for this week when Sherry asked me to speak, didn't look at the FOMC calendar. This is FOMC week. And when I trade FOMC week, Tuesday, Wednesday, Thursday, I'm trading a little differently. I'm very, what you might call, scalpy. In other words, I don't let things go for the day because the market's kind of all over the place. And FOMC day, I'm not even there after 11 o'clock. Well, I'm usually not there after 11. So I only really had Monday. Monday was a good day. Tuesday, Wednesday, Thursday. And I just want to show you real quick. So this is a trade from last Tuesday. I'm just explaining why I went back to last week. But I'm not hiding anything. This is this week. This is this week, just finished out here today. There's Friday. It was a good week. It was a little above average week. It was a great week. I think I had almost no losing trades, but there's not the example of what I'm preaching today. These were all because Tuesday, Wednesday, Thursday were the FOMC days, and I treat them all like FOMC days. I was a little scalpier, and actually it proved to be to my detriment, even though it was FOMC week. Now, I did this on purpose, but like Intel, I actually had 2.5 times the profit on Intel if I would have walked away. GDX had a little more profit. Couple others, it doesn't matter here, but several trades had more profit, but because it was FOMC week, I do not hang on to them. So that's why I had to go back to the prior week. I just want to give you an example of DVN. And the issue here is management. I just want to bring up some points on the slide here. So I ended up shorting DVN right there. This is the daily chart, the day of the trade. So I'm shorting this big rally, this topping tail that's into the prior topping tail, that's in a daily downtrend. Waited for here to short it. So I'm short DVN there, right? And the point I want to make is, if I'm sitting there, here we drop. We have a green bar, boom. And then remember, this topping tail means there was a big green bar at that time, right? How many traders would have taken some profit there? And it was, what was it up at that point? I had a 50-cent R, and so it was, yeah, it wasn't quite up an R, but you get that bounce. And if you're sitting there, it's tempting for anybody, even myself, to say, oh, I'll take a little off the table here, right? I'll take a third, take a quarter of it off. So you're sitting there, you take some off the table. They're not there. How about there? I mean, look at this thing. Here's a green bar that took out 4 prior bars, right? So you're out a part of the trade at 3/4 of an R or 8/10 of an R, meaning if you risk $500, you're only up $400 at that point on the whole trade. You take some off the table, you water it down. Remember, anytime you eventually hit your target, anything you do just is giving up money. So I didn't take money here and I didn't take it there. I didn't take any money until there was the first time I took money. Why did I take money there? Well, there one big reason. I wasn't sitting at the screen. I was gone. I left from here shortly after getting in this trade. As a matter of fact, this was late for me. I came back like for this trade because I'm done in the morning, usually 10:30, 10:45, I'm done. But this day I wanted to come back and look at a couple of things because some things were rallying in the areas I wanted to short them. DVN turned out to be the right trade for me. Came back, wasn't at the screen more than 10 minutes, shorted, and left again. Went and did something. I forgot what I did that day. I like to, around noon, either do a little exercise or run some errands if I'm going to do errands, whatever it is. So I left. It was around noon, and I just happened to come back right around 1:30. Happened to be good timing. Now, it's not just because it had a lot of profit in it, which it did, but it was in an area. This is, to me, was kind of the first real target area. But my point is, if I have the confidence to know that here's the entry, and none of this matters, because I know none of this matters, because this trade came from the hourly and the daily chart, none of this matters. Why should I sit here? The only thing you could do would cause me to stop out or to take a small profit. So I took half the trade off here. And then I let the rest of it go and walked away until the end of the day. I came back at 3:30 and cleaned up the rest of it. That was almost a 4-hour gain on that half the trade. But even following what I say, that first half watered it down, right? I mean, how much money did I lose by even showing up at 1:30? Because I would have walked away to here. Now, I'm not advocating that you just let everything go forever. No, of course not. There are areas that you want to focus on. And my point is that if you're in a trade, you have your little target area set up, you have a stop in place, there's no point in even being there until you're in your target area. Most traders don't have that confidence. And I hear dumb things sometimes. I hear sometimes, well, what if you came back and it bounced to here? You would have given up all that money. And again, such an ignorant comment. If I had been sitting there, I never would have got the trade that low in the first place. So if I make 3 times what I would have made, I'm not worried about that. I gave back a little bit of that extra profit. So this is what I'm talking about, and this happened to be a day trade. It applies to long-term trading. Over the last 2 years, my long-term trading in the long-term trader letter at DTS has a 4R, a 4 Sharpe ratio. It means my average winner was 4 times my average loser. That's something, for me to be proud of. That's good trading, and maintaining a 50% batting average during the prior 2 years. So that is all it has to do with good management, good entries, good management on entries, good management getting to targets. If you're serious about getting better, 3 things that you have to think about. Awareness. Think about the first step in Alcoholics Anonymous. Awareness means, do I even have a problem? What is the problem? If you would do some serious look at your trades, you would begin to understand if you're picking terrible trades. In other words, if none of your trades ever come close to getting to your target, you're a terrible technical trader and you need to learn what you're doing. If in hindsight, a lot of your trades hit nice targets, but you're not in them for that target, well, then your problem is management. You need to find out what your problem is. You need to do a little self-evaluation, and then you need to figure out choices of how you're going to manage. It's part objective. Managing a chart is a fairly objective thing, but a little bit of it is personal, because to some extent you have to incorporate how you are psychologically. I know some traders that could not stay in a trade for an hour as a day trader, no matter what. You could tie their hands and feet together, they'd find a way to get out of the trade. So you have to incorporate a trading plan that also allows you to follow it, because if you don't follow it, it's worthless. A perfect plan that you never follow does not do you much good. Awareness, you can't fix a problem if it's not there. When you start, huge losses may be an issue, but you are keenly aware of the issue. You're aware of large losses because you see them. At the end of the day, you go, oh my gosh, I'm down $2,000. I'm down $3,000. It's a punch in the face you can't ever ignore. But there's a problem. Bad management is like a silent cancer. You may not even notice it. You may even be proud of it because you're saying, oh, I got a 60% batting average. And you're saying to yourself, oh, if I got a 60% batting average, I'll get better at taking more money from these, but you never do. You never do. Day after day, day after day, week after week. You keep saying, oh, I'll get better at this, and you don't. There's no progress. And you get stuck in this rut that people often get stuck in for a long time. You're losing money, you're barely breaking even, you don't get better. Sadly, you may not even know if your trades you took were maximized or if you could have made 1.5, 2, or 3 times the money. So awareness is key. Self-evaluation lies in your past trades. If you are paper trading and following a plan, or if you're risking any money, the answer can be found in looking at your recent trades, a lot of them. There are many tests you can do, but the goal is simple. How much would you have made in hindsight? And am I proud of the way I did it in real time? Your answer will likely be no. Now, nobody is always going to get to the maximum move of any trade. That's impossible. This is a ridiculous request to even try to make. But the question comes down to your management. Is it costing you money or making you money? I want to repeat again. I've done significant studies working with people, having trades sent to me. 85 to 90%, not of brand new traders, but of anybody who'd be listening to me, the audience now, listening to me, 85, 90% of you would be doing better if you never touched your trade until you hit the target you wanted or as a day trader to the end of the day. But Paul, it's going to take a long time. You want me to review all my trades? Really? How long is that going to take? As a day trader, I'm really big on the topic that you should not be working more than about 2 hours a day staring at the charts. Maybe you come back for another half hour at a key time. If you're sitting there all day long, it's likely the indication of a losing trader. Now, not always true. Don't yell at me. There's different styles and things you can do. But if you're losing money and you're sitting there all day, well, acknowledge that's one of the problems. I like to hit the first 90 minutes, that's it. You have a lot of time throughout the rest of the day to be reviewing past trades and to be maybe getting prepped for the next day a little bit. Focusing on your past trades is where the gold is. That is what backtesting is about. There's no such thing as backtesting strategies. That's garbage. It's just something put out there to make you think that there's some magic holy grail that you could do. There's some magic strategy, some magic software. Sorry, doesn't exist. If it existed, you know what? I would use it. I would love it. It would be great. Doesn't exist. There's nothing out there that works, and common sense will tell you nothing works. Backtesting involves going backwards and testing different concepts of how you could have managed your trades, or different entry concepts you could have used on your trades, or different ways of stopping out your trades. There's different ways to stop trades despite popular belief. It's not the topic for today really, but one of my favorite sayings is that new traders go broke not taking their stops. Experienced traders go broke by taking their stops. And please understand, I am in no way saying you shouldn't have a stop, but improperly using stops is what probably kills more trading careers than anything else. Choices to manage. This is not an easy step because it depends on what you find in step 2 and your personality, and if you really want to make a change for the better or just going through the motions. I can't tell you how many times traders, I see them, they email me, I work with them a little bit, they find this stuff out, they realize what the problem is, and they say, I'm going to do this and this, and then they never do anything about it. They just immediately regress back to their old mentality and almost refuse to even acknowledge that they haven't made a change. It's amazing what trading does to you, because it's the ability to make a former week's salary in 15 or 30 minutes that has people just kind of going gaga sometimes, because you see this money and you want to get it all the time and you stop doing what you're supposed to be doing. Believe me, I've seen it from every angle, including myself. I had to go through this. Remember in the beginning when Sherry announced me, I had no expertise in the market at all. I mean, literally didn't know a stock from a bond when I started. And that's what I think actually the best trader is. My favorite people to train are people who have no experience whatsoever. The most difficult people to train, to be honest with you, I've trained 2 market makers in the market. They're the worst traders in the country. They're terrible. They're bad. What they do is not trading during the day. They do something else. Stockbrokers, don't even talk to me if you're a stockbroker, because you're hopeless. Just go do something else. It's almost impossible. There are good professions you can have, but most professions come with some detriments. And the best thing you can be is just clear, open-minded, and understand that the market, trading the market, is really a lot different than what most people make it out to be. I don't, as a human being, I do certain things. I listen to the news because the news is on, but as a trader, I do not listen to the news. I don't have it on in the morning. I don't want it on. I don't listen to news. I don't ever look at fundamentals or numbers or earnings report or any of that crap, because it's all complete crap. If you think you're ever going to make money looking at that, just stop, go to Vegas, take your whole IRA, put it on black, and see how you do, because you'd be much better off. When I make a comment like that, I'd like to point something else too. I have no purpose to say that other than to try and help you, because I've been through it. What purpose does that serve me to say that? If in some way I could take an earnings report and make money from that, I'd incorporate it in what I teach or what I do, or in the trading room, I'd say, hey, let's take a look at this earnings report and see what we can make out of it. It's complete and utter garbage. If you want to hear more about that, I do. The first class I teach as part of the seminar program is open to the public. It's called the Introduction to Mastering Technical Analysis. If Sherry put that link out there for the free stuff page, once you're there, you don't need a new link, but off to the left, you can go to the DTS homepage, whatever. There's a calendar over there. If you go to the calendar, you'll see the next, I don't even know when it is, but you'll see the next time I'm doing the intro class. It's probably about 3 weeks away. Probably 3 weeks from today, I would guess. The walk away, specifically day trading. What I like to do as a day trader, my goal every day is to get positioned for the walk away. And that means I typically take about 3 trades a day, maybe 4, sometimes 2. And I try to get set up where maybe the first trade, maybe I took a target and made a little money on that. Second trade, maybe I moved the stop, so that's kind of close to break even or in the money, not because it's break even, just because that's what the chart said to do. And maybe I get in a third trade. And what I try and do is then adjust everything and say, okay, here's a look at the chart. Here's where my new stop should be. I have a little money in the bank. And now you know what? If I walk away and everything trails out, in other words, the remaining position stop out, I'll still be up a little bit of money. I'll still make my goal. I'll be down a little bit. But if things go the right way, I'll make a whole week's profit. And that's where I want to be every day as a day trader. And once I'm in that position, the only thing I can do by sitting there is to screw that up. And I say that to the room. I'll say, see ya, I'm out of here. I'm going to check in at lunch. Let me get out of here now before I screw something up, because I have the same mentality all of you do. It's just I've learned to overcome it, to fight it, to do things. And I know I need to get out of there, because if that short I have has a big red bar, I may take some of it, and then I come back and the whole thing is now fallen to make a whole week's profit, but I took a third of it already. So getting set up as a day trader is my goal, is to be set up. And this is part of management, to get yourself set up in a way that if you can, that the worst that can happen to you is you lose a little money or you break even. And on the good side, if you have a good move, you're going to be home run territory. Another one of my sayings is don't go for the home run when you need it, go for it when you don't. Everybody goes for the home run when they need it, right? You're down money, your account's dwindling, and you decide to go after the, we call it the crazy little crappy stock of the day, some $2 stock that gapped up you think is going to go to 30 by lunch, and you just keep losing money. When you go for the home run is when you go for the icing on the cake. You're already up your day's goal, you're up more than the day's goal, and you see this little thing, you go, hey, you know what, this thing could actually move for several days. I'm just going to hang on to it all day to see what happens. Don't even manage it. Go for the home run when you don't need it. You can never manage a home run when you're struggling, right? When you're struggling, even if you connect with a winner, you're not going to manage it right. You're not going to take home a home run. When you don't need it, it's easy to manage it. Remember this one. This was kind of a home run trade. I didn't need it that day, walked away, came back to a home run. That was the DVN trade. I'm going to leave time for questions here. I believe we have 15 minutes. That's my slide. Sherry already introduced me. I think she did a good job with it. So I started DTS back in 2017. Greatest thing I ever did. I wish I would have done a long time ago. It's been fun. I don't work a whole lot. I consider myself kind of quasi-retired. I run the room for a couple hours in the morning. 3 out of every 8 to 10 weeks on Saturday, I teach classes. There's now a home study program for my seminars, so that relieves some of the duty of me of, you know, answering a lot of questions. I meet with my students as I need to, but for the most part, you know, every day at 11 o'clock or so, I'm kind of free for the day. I spend an hour at night doing some emails and doing some research, and I enjoy it a lot. DTS free stuff page, Sherry, if you're still out there, put that out there for them again. Come visit the free stuff page. And when you go to the free stuff page, thanks. If you're just overwhelmed, there's some sections there. First of all, the prior event section and the trade of the week videos, you're just seeing the most current ones there. You have to click up on top to the archive page, and that'll take you to all the rest of them going back to the beginning of time. If you're overwhelmed, there's some other sections there, educational videos, there's just a few of them, traders for newbies, and there's what's called the Hall of Fame section. These were voted on by DTS members as being the best at the time of the prior event. So start there if you want. All of those videos are things that can help make you a lot of money. And also, if you would like to, my email is Paul at, I got to type this because I took down everything I can copy, disciplined trading strategies.com. There it is for Sherry. I hope I spelled that right.
Yeah, you did it. Okay, you got it out to everybody.
Feel free.
Question
Oh, I don't know. Going over. Okay, feel free to email me if you have any questions. I have plenty of time. I always take care of my students first, but I have no problem talking to you, looking at some trades, whatever it may be, whatever I can do to help, I would gladly do that. So with that, Sherry, if people have questions, I
I
have
do have a
10 minutes.
question for you.
Okay.
Gwen is wondering, do you set stops on 100% of your positions or just a portion of it?
Well, Glenn, that's a two-prong answer there. You absolutely have to have some kind of stop in place for everything you do. Yeah, there's no debate about that. There's no difference of opinion because you become a deer in the headlights and you give up half your account. You can never ever do that. Okay. Now that being said, there is a right way and a wrong way to do stops. And part of, and I don't want to sound like a commercial here, but it's a long answer. And part of my second class is all about management. It's about management of getting to target, management of entries, and management of stops. I think the management of stops, I know it's kind of a fuzzy term, but the management of stops is perhaps one of the greatest things you can do to increase your profitability if you're a reasonable trader. Because the question I want to answer you, Gwen, is if you're a reasonable trader, how many times you come back at the end of the day or you look at the end of the week on a swing trade and you find out that your trade is at this great level, like you're making all this money, but you're not in it because you stopped out by 5 cents somewhere back there. So management of stops is extremely important, but throughout the management of stops, there's always a hard stop in place somewhere is the best way I can answer that for now, okay?
Nice. And Silver says, howdy, Paul. That was a very good and informative presentation. I enjoyed it very much. Thank you very much.
That's not a question, Silver. but thank you anyhow. Do we have more questions coming or?
Do you guys have any questions for Paul?
I can
Now's the
always,
time.
I can go on automatic and ramble about whatever you want for a couple minutes if you want to, because there's so many important topics out there. Sherry, I was going to email you, but like I always say, if you ever have an opening last minute because somebody got sick or something, I can always jump in because I have so many, different topics that I have.
I appreciate that.
Yeah, feel free. It's fun coming here because you always have a good group of speakers. I think that are, people can learn something from. But
Yeah.
eventually, a lot of what I've said lately, folks, is that you eventually develop as your own trader. Even my closest students. I have some students that are almost little photocopies of me, the way they think and what they do. And of course, I love that. But I teach technical analysis in a way. It's as objective as it can be. But when you walk away, it's not like we're all doing the same thing. You have to take the technical analysis, and kind of match it to your style, what you like doing. In other words, if I were to ask all of you, just generally speaking, all technically good concepts, but do you like buying breakouts or do you like buying pullbacks? Well, about half of you would say breakouts and half of you would say pullbacks, even though we're leaving the term undefined. I just mean generally speaking, do you like something on the run with nothing above it, or do you like something that's kind of falling into an area? You'd be split on that decision. If I said as a day trader, do you like a 1 minute chart, a 5 minute, a 15 or a 60? I get all different answers. So this is what you have to kind of take technical analysis and match it to what your style is. And therefore we end up with different things. There's 3-4 people in the trading room that are more active than the rest. And they are like just photocopies of me because they were trained by me. They never had any knowledge of the market before they took a class with me. And we often end up with different trades. And we kind of comment on each other's. I'll do something, he does something else, he does something else. And a lot of people in the room are putting, their trades out there. They're not like official trades. They're just saying what they're doing. But they're good traders, and we do different things sometimes. And I may say, hey, I like your trade, but I'm going to do this, whatever it is. So a lot of it comes down to style and matching what it is that you do. Boom, period. Did you have another question there, sound like?
I do. There's a question from Gwen. Do you have a favorite setup?
Yeah, kind of. I think everybody revolves around their bread and butter. Gwen, I probably have, because all the time, I mean, if I were to like produce a backlog of every setup, if you will, God, I don't know, there'd be three dozen of them or something, but most of them I don't use. I probably have every day in the room. You saw that sheet in the room back there. I put the strategy real quick. There you see on the right, there's a strategy there, right? Is it there? Yeah, there's strategy off to the right. And as I look at it, there's probably 4 or 5 that I would say are 99% of what I do every day. And I definitely have a couple of favorites. The problem, Glenn, with having a favorite and waiting for that all the time is you don't see it every day, right? If I could guarantee every day, and what I call it, and I don't want to like, I don't like using cliche words, but what we come to call it in the room is like a little mini gap under a mattress. Those are my favorite things. But the thing is, you don't see it every single day, right? So you have to have kind of a backup, because you do want to be very particular. You don't want to force a trade, because that's detrimental. But on the other hand, you can't wait 3 weeks for a day trade because you're not seeing what you want. So I have 2 or 3 favorite things and another 2 or 3 backup, I would say. How's that for an answer? Let me add this, as long as I hear silence, Gwen. Let's say you were to ask, well, Paul, show me that trade. And this is where I get uncomfortable, because I don't want to sound like a salesperson, but I hope you're all smart people, you can appreciate. I can't just pull out a chart and show you, oh, here's the trade I like, because the underlying knowledge underneath that is deep. I mean, I speak for 3 straight days when I'm teaching technical analysis. And it's kind of like being a doctor. It's kind of like being an eye doctor or an ear doctor or a dermatologist or a cosmetologist, fix wrinkles, whatever it is. You can't do that without a medical degree. And why is that? Why can't you just go to a doctor and say, oh, show me how to use this little eye exam machine and I'm going to be an ophthalmologist? Well, no, you can't do that, because you need every understanding, every underlying thing that there is. Just weird example, my mother was diagnosed with the disease from her eye doctor that no medical doctor found. And it was critical that it was discovered. So without that degree, he wouldn't have found. It's the same thing in technical analysis. I could show you an example of what I do. And this is the detriment, if you will, of the Trade of the Week videos they have out there. And I always warn people, you can go look at them, but you can't reverse engineer it. So you can look and say, oh, okay, I see what you did here. I'm going to do it on this trade. And then people send it to me. I go, this isn't close to what the strategy is. Because when it involves 4 time frames, it may not seem right to you, but even if I take a trade on a 5-minute chart, I'm looking at 4 time frames to make that decision, because the bulk of the movement doesn't come from the little wishy-washy day traders that are in there with their 500 shares. The bulk of the movement comes from up above, from bigger moves. And when you can see that and incorporate that into what you're doing, and then the entry is everything on all of these, and there's different entry requirements depending on where exactly you rally to, how far you are from support or resistance, yada, yada, yada. So I don't want to make it sound like it's complicated, but it's not just like, oh, here's the strategy, go do it. Make sense? More questions?
Good deal. Yep. There's a couple here that you may want them to email you about it. Darren says the reverse of buying in and being stopped out is having a level to get out at, and the market falls short, but being close could have gone further. When do you accept 80 to 90% of the expected run?
Okay, could you get, yes, is he talking about stops or targets? I thought it was stops, but then he said expected run.
Yeah, Darren, you're going to need to clarify for him.
I think I got your question until you said 80% of the expected run, then I was a little confused. He's talking about how to accept a stop.
The reverse of buying in and been stopped out is having a level to get out at, and the market falls short. Is that a scenario?
Yes, I got it, sure. I see what he's saying. He's saying, yes, if you're managing stops, the reverse is how do you get to a target because you just come up short. In a word there, the structure of what I teach, and again, it's not like a one-line thing. It's a half day we talk about this because it's critically important. But if you would, Darren, if you would take your entry point in your target, and let's say you just put bands every 3rd or 4th of the way. What I do is initially, I don't try to protect the trade at all. To me, there's nothing to protect. It's going to stop or it's going to move. When I get to a certain point and there's something to protect, then I'll institute level 1, if it was probably a bad term to use, but I'll then introduce the first level of management to maybe protect something, but very loose. And the closer I get to a target, the more strict I get about locking in. Does that answer your question, Darren? It's a theoretical answer.
And he says target run falling short, so that you did get it right there, right?
Yeah, exactly. And like when I get, like, for example, as a day trade, Darren, when I get 90% of the way there, I'm doing what I call a tick chart pivot. And don't let that freak you out. I don't actually use a tick chart, but it means when I get like 85 to 90% of the way to the target, I'm going to be taking something right there or maybe getting it past the target. The way I do it there is actually is at some point I'll lock in a trail on a liquid stock, and that'll be my new target, the trail. And I'll either get 85% of the move, or I'll get beyond the target. Several times every week, I actually get beyond the target by using a tight trail stop. And that only works on liquid stocks, of course. If you walk away, or if you have a less liquid stock, you'd have to kind of try and keep a looser trail and then accept the target if you get it.
So we have a couple more. One is, what's your favorite broker?
Well, when you see my charts, they're trade station charts. I don't want to answer the question, Sherry, about what my favorite broker is, because that's not my area of expertise. And the reason is I have 3 platforms. I've used them for years.
Yeah.
And to be honest with you, I am not familiar with a lot of new platforms out there. Thinkorswim, the new TC2000. So I'm simply
Don't
not.
fix what ain't broke.
Yeah, well, yeah. I mean, I'm an expert at technical analysis. I'm not an expert or a broker to you. So I use what I use, but it may be for the wrong reason for you. So when you see my charts on my platforms, is TradeStation. I like the charts, but I wouldn't want to recommend something because there may be something better out there in the future. I may even look myself. So I don't.
And what you like is not necessarily what I'll like.
Yeah, some people, I'm big on charts. Like, I have to have a certain looking chart or I can't trade. So to me, the charts is it. For somebody else, since most brokers today are tied to the platform, you're locked in with the charts and also their policies and their fees and all that stuff. So it kind of gets to be a complicated question.
All right. And then what do you think about pullback to VWAP strategy?
VWAP is garbage as far as I'm concerned. Volume weighted average price, for those who don't know what it is. VWAP is it's not really a technical indicator. Technical indicators take past information and just regurgitate it for you. There is a new thing being introduced in there, sort of. It's kind of, VWAP is kind of in between to me, but it's still all things that's visible on the chart. And here's the thing for me for a lot of this, whether I can explain or not. My favorite saying is, I've tried it. It doesn't make me a penny, so I don't use it. I take it off the screen. I'm all about price action. I'm all about 4 time frames. My definition of technical analysis is to understand the interaction of the pertinent time frames. And then when you get to that area, to understand that's an area, and then to see the battle between the bulls and the bears. This is what technical analysis is all about. You watch that battle and you make your action based on that. Therefore, a lot of this stuff is just garbage to me. VWAP, using intraday volatility index is complete worthless. Pre-market charts are worthless. There's all these terms out there people like to talk about, and they're just worthless. Look for yourself. But you can show me the VWAP and show me a chart where, oh, this worked like magic, but that doesn't mean anything. What you have to do is take every trade like that, show me the same VWAP setup and tell me how many worked. And you're going to find that you have no improved odds on VWAP. It's just another thing out there to confuse people.
Now, Jiang is going to send you an email because he asked a question about long-term strategy, and I just feel like it's going to need more discussion than you have time for here. So he's going to email you. I gave him your email again. Guys, I put Paul's email, and he did too. We also put his the URL to the free stuff page, and I'm telling you, if you work through that stuff, if you go through all of that, it's going to take you a little while, and I think you probably will change your learning curve. If you'll look at all of that ahead of time and then contact Paul, you will not believe how much you'll learn based on what he's got there.
Yeah, sure. If I could add something about the free stuff page, if you don't mind, if I have a second there.
Yes.
Number one of the purposes, people ask sometimes why I have that out there. And there's a couple of reasons. Number one, I'm freely going to tell you that you won't learn to trade from that. It's the peripheral stuff. To me, it's incredibly useful. And if you're going to try to learn to trade for yourself, it's the best source you'd ever have. But what's not there is the 25 hours of technical analysis I teach as part of the class. Now, you could maybe try and find it in there, but it's difficult. But one of the big reasons for you having it out there is so you get to know me personally. Because if you want to sign up for a trading room for a month, who cares? You don't like it, you lost 1 month fee, who cares? But when you sign up for a seminar program, it's more expensive cost. And the best thing you can do is get to know your mentor. There's so many people that have told me they wish they got to know the person before they sign up for something because they turned out to be not what they expected. So here you get to hear me teaching for hours on end. And if not everybody likes me, I'm pretty straightforward with stuff. You don't like me, that's fine. Do what you want. if you do like me, at least you have a good sample of me. And that's one of the reasons I like having it out there, because a lot of people get a sample of what I'm like.
Well, you're there.
I'm here. Hi. Did I lose
Okay.
you guys?
Okay.
Did you hear me?
I thought it sounded like it cut out, and I was like, "What?"
I finished and was waiting to hear if there was another question. Hopefully you heard.
All right. Well, the last thing that we have here today is from Tucker. He said, "Thank you, Paul. Your knowledge is real and profound." And I think he hit them right on the mark.
Well, thank you, Tucker. Appreciate it.
So with that, I think what we're going to do is call it a day and call it day 3 is done. Thanks
Great.
so much, Paul.
Thanks, Sherry. Thanks for having me. I hope you did a good job as cleanup here today. And
Oh,
goodbye, everybody.
absolutely. I think we have quite a few people who've been here every day, all day.
That's great.
And I think that it's been a really good event. And I just really appreciate all of our presenters for being here, cutting edge strategies to help our people improve their trading. And this was a great presentation to finish it with. So thanks very much. And
Okay.
to everybody who attended today, I want to thank you for being with us. In June 7th, 8th, and 9th will be our next event. If you have any questions, it's support@tradersexclusive.com. Or if you follow someone that you think would be a good fit for this event to speak, you should let me know about them. I'm always looking for great experts to bring on. And I hope you guys trade well. And with that, we'll say goodbye.